We need to talk about Nvidia today because there was an insane amount of bullish flow just last week alone. You could see up here 91.3% calls to 8.7% puts when you filter for over $1 million orders. That is crazy. That is heavily skewed to the bullish side. As you can see here, these are no small orders by any means. $10.1 million call here early on in the week with another $3 million call right next to it above the ask on both of these, out the money as well. You can see up here, as we scroll up, $6.8 million call, $2.6 million call. These were also out the money at the time. And this was just early on in the week. If you scroll up here, you can see it's just call after call after call all week long, and rightfully so, because you can see on the chart over here it just continued to grind to the upside all the way since it gapped up on Monday. There was a bit of rejection over here on Thursday, but still it has remained relatively stable. And I did draw this 1,144 pivot here because I believe if it is retested this week, it can provide some type of a support. The reason being is that, well, first of all, this has acted as resistance numerous times now. You can see over here, this was the initial pivot point that rejected over here on May 28th. And technically, yes, we did go above intraday over here, but for all intents and purposes, it has acted as a key supply area, even just above there. And you can see just multiple 1 hour candles were unable to close above. Like here, we closed the hourly and then it wicked very briefly above, but then had a hard rejection over here, rejection, et cetera, and then afterwards also numerous rejections over here as well, rejected a couple times, and then after it finally broke out, it acted as a support, and that's when things changed and it continued to go a lot higher. And especially with CPI and FOMC this week, there is a lot more potential for volatility in the market as a whole, especially the Mag 7, since they are the ones that have been ripping by quite a bit as of recent. So if we do see some type of a dip off of something like CPI or maybe FOMC, which are both on Wednesday, by the way, then this is a viable entry point, and especially a point for bias in the short term. As long as we stay above 1,145, I believe in the short term it will continue to have this aggressive nature. Now, also, you have to look back here, just looking and scrolling back at previous price action, you can see that this has just been ripping for a very long time, especially if you look at the daily. So you'd expect at least there to be some type of consolidation like we saw from over here, where it can rest in a sense, kind of like it did from back here. But again, as long as we stay above, I believe that that aggressive nature will continue to be the case. And macro wise, if you want to look at the daily to weekly basis, I'd consider this to be bullish as long as it stays above my blue zone here. This was the previous all-time high that had to break back above over here from earnings in order to have continuation higher. So as long as we stay above here on a daily to weekly basis, there is a bullish macro setup for it for continuation. So just keep that in mind as well. And right now we are quite a ways away from where this is. So that is very helpful. And what I was referencing with 1,144 is this is the short-term bullish bias, but the macro, like big picture that we're looking at here from the daily, like I just said, the weekly candle is, as long as we stay above this blue box, it will continue to be bullish in that macro time frame. So that's something that I'm keeping aware of as well. And again, for a trade setup this week, if it is able to hold above after CPI on Wednesday specifically, I do favor a long. It's able to be above this 1,144. And again, that is also going to be dependent on if it's continued to be supported by call flow like we saw last week. Whenever you see call flow this heavily skewed to the bullish side, typically you're going to see that corresponding outcome of upside. So pretty incredible as well, because some of the prints that we saw, like when it hit a $3 trillion market cap, they were adding far out the money calls as well on it. So just a ton of these, like you see 1,300 calls that were being added. At one point, people were adding 1,400 calls as well. So very aggressive bets on Nvidia. And it sounds ridiculous. It looks ridiculous because of how high up it is. But the crazy thing is, if you've been following the tweets on the Cheddar Flow account or watching these videos that we make, it's just continued to rip to the upside. So these call orders have been warranted, as crazy as it looks, and it has worked out in their favor. Of course, at some point that'll have to change, but it's worked for a very long time now, especially since the start of the year. So as long as this continues to be the trend in terms of the flow, that will continue to be the bias, especially if you pair it with a key pivot level like I have here of 1,144. So that's what I'm looking for on Nvidia this week. And I had to do it. I had to talk about GME today because pretty crazy all of last week, and a lot of people have been requesting it. At least that was more so the case before Roaring Kitty's live stream, because you can see here it did tank by the end of the day. And it is a bit difficult to look at the chart when a lot of it is very sentiment based, and I guess you can call it narrative based. But just based on what I can see technical wise, this is a pretty bearish rejection. Bulls did not want to see something like this. You wanted to see it hold up above this breakout level of 40, which we saw it break out above on Thursday of last week. But unfortunately for Bulls, they did have that offering, so that did change things up quite a bit. And there was initial upside strength early on in the day after, so it did fill the gap, but it was unable to hold that, and then crashed all the way back down to where it was the previous 2 days, actually, all the way back to Wednesday. So this is not bullish on a chart sense of things, and the weekly will show that as well. You can see here just a high wick and a hard rejection back down, kind of similar to what we saw, well, not to the extent, but kind of similar to what we saw from over here. A high wick and then slam down. Just this was even more to the downside, more bearish. So this is not very bullish. You're going to have to see some type of narrative spring up that's going to change this, because it's going to be pretty difficult to come back from a hard rejection like that. If you are a bull, though, you do want to see it above 40. If it can get back above 40, I will change my mind on it being bearish. But until that takes place, I'm expecting to see continuous rejections, whether you like to hear that or not, just kind of the reality of it technical wise. But again, 40 would be the bias point. Under is bearish and above is bullish going forward from here. So that's my thoughts on it. And the last thing I do want to talk about today is QQQ, because we are well above where my bullish bias level is, the one I've talked about for the past couple weeks. We did retest that and had a very strong reaction to the retest, and now we're back to all-time highs. So in the meantime, or at least the short term, considering we're back to all-time highs, the short-term bias point, kind of similar to what I showed you with Nvidia earlier, is actually going to be better off if I use a box over here because of numerous resistances. But the short-term bias point will be this box here, and the reason I chose a box, I'm just making it perfect. The reason I chose a box is because we had a hard rejection up here at the top, and then also numerous rejections over here once it did retest. So it did require us to get back above this box for it to be in a bullish bias mode, which we are right now. And as long as it continues to stay above this box, it will continue to have short-term dips get bought. So this is extra important for this week with CPI and FOMC approaching, because it's possible we see some type of a gap down or just excess volatility in general. That's kind of expected at this point. If we do retest this box during the week, there can be a nice positive reaction in terms of a support around here. If we do go under it, though, that's when things start to get bearish again, and this would be a failed breakout. But at the moment, we are amid a breakout. So as long as it stays above, as long as it just retests it, that it is in bullish territory in the short term, and I'll look to add dips. For example, if CPI were to gap down into the box from over here, there's a valid entry setup with an hourly close being your risk under that level. Roughly the lower end of this is 459.50. So if an hourly close is below, then I would cut that position. Otherwise, it continued to rip all the way to new all-time highs, really, just from retesting this area. So this is a great short-term bias point, very similar to what I showed you with Nvidia earlier with this 1,144 level. So I like to add these, especially during aggressive uptrends, because it gives you a sense on where the bias is overall. And once that bias point breaks to the downside, it's more bearish to chop oriented. But as long as it stays above, you can continue to trade with that aggressive trend. And again, the trend is your friend. So I'll leave you guys with that for today. And other than that, I will see you next time.